Hello traders, this is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Tuesday, May the 13th, 2008. I apologize that there was no news yesterday. That happened for two reasons. First of all, the Switzerland brokers were closed for holidays yesterday, so I did not get updated news data from them. And the second reason was my Windows Movie Maker crashed for the second time on a second computer. Therefore, I wasn't able to do any broadcasting yesterday. We are trying to do this off of a new computer. We are still having some sound issues. It's not up to the quality that I prefer, but we're going to have to muddle through until we get everything resolved. I hope you'll be patient with us, and on with our news broadcast. The headlines out of Switzerland earlier this morning read, "Dollar rose on Monday on oil price dip and unexpected strong HSBC earnings." The dollar rose against the Japanese yen and Swiss franc on Monday as investors snapped up riskier assets, such as stocks, encouraged by a dip in oil prices and the unexpectedly strong earnings from HSBC. The investors' appetite for risk revived interest in carry trades, helping to lift the high-yielding euro, sterling, and Australian and New Zealand dollars against the U.S. currency. In carry trades, investors borrow against the yen or other low-yielding currencies to buy assets offering higher returns. Yesterday, the dollar-yen was trading up at 103.87. The dollar Swissy was up at 104.49. The euro-yen jumped higher to 161.35, helping the eurozone currency to ease losses against the dollar. The euro-dollar last traded up around 155.32. Analysts said there is a strong correlation between the euro-yen and stocks, and gains in the currency pair tend to feed through to the euro-dollar. Analysts also said the euro's advance against the dollar did search for stop losses above 155 area, amid thin liquidity, with most European markets closed. U.S. and global stock markets were cheered by news that the European banking heavyweight HSBC posted unexpectedly strong first-quarter earnings, and also the fall in oil prices. Traders will watch a big slate of economic data today, especially April's U.S. retail sales, as well as speeches by Fed officials for clues on whether the U.S. central bank will cut benchmark interest rates again next month. Chicago's Fed President Charles Evans said the consumer was under a lot of stress and the economy faced downside risks. Short-term interest rate futures, which track market expectations for Fed monetary policy, showed an 86% chance that the Fed will keep benchmark lending rates unchanged at 2% when it meets on June 25th. At the same time, some signs that European growth is stumbling has stirred speculation the European Central Bank could edge toward trimming rates for the first time in nearly a year. This could boost the dollar, whose appeal has been undermined by the Fed's aggressive rate cuts. In the Asian session, the dollar regained some of its confidence. No great surprises hit the market. The end of an extended furlough in many of the major markets probably contributed to a respite in the markets. There were movements nonetheless. The dollar continued to enjoy the favors of investors who appreciate the Fed's reaction in face of the troubles the U.S. economy is facing. The dollar moved higher versus the euro to 154.80 and against the yen at 103.65. The resilience of the greenback was also seen against the Swiss franc at 104.65. But you should not forget that the dollar remains a weak currency. U.S. Treasuries no longer benefit from the zero-risk advantage they were known for. Operators now have to reckon with Treasuries that have volatility risk curves with regard to the U.S. Treasuries. Notwithstanding this, the dollar continues to benefit from investors' confidence amid the Fed's reaction before the stagflation that seems to grip the U.S. economy. In the U.S., equity markets Monday saw trading gains despite light volumes. The Dow Jones, S&P 500, and NASDAQ both closed higher by more than 1%. 9 of the 10 sectors were higher on the day, with only energy coming under pressure as crude sold off a couple dollars. Investors were encouraged to buy as FedEx warned of bad news surging on Friday evening, and a large loss announced by the MBIA. Consumer discretionary at a plus 2.1% led the market higher, while materials at a plus 0.9% and financials at a plus 1.7% were in supporting roles. In Asia, the stocks were higher this morning, with Nike up 1.5%, the Hang Seng up 0.7%, and the MSCI AP was higher by 1%. Tech companies and automakers led gains after profit numbers from Fujitsu and Isuzu Motors boosted sentiment on the robustness of earnings. St. George Bank had its largest ever rise after the bid by Westpac Banking Corporation. HSBC was higher in Hong Kong after its results were out yesterday, as it set aside less than expected for U.S. bad loans. China has instructed mines, chemical plants, and oil wells to halt output after the large earthquake took place yesterday. Elsewhere, the New Zealand dollar declined yet again. The reason was the poor showing of housing data that dropped to its lowest level in 16 years. Along with this figure came disappointing figures for employment for March. There is now growing sentiment that the Reserve Bank of New Zealand will have to cut interest rates. As a result, the Kiwi fell against the dollar. In Europe, the pound recovered after the producer price index showed increasing signs of inflation, thereby shifting any expectations that there would be a rate cut in the near future. Investors were still worried about how the Bank of England was going to tackle the problem of this price raise, along with growing signs from other sources of data that the economy is slowing down. The latest data will probably hold the bank's hand from taking any action on interest rates. Analysts still expect a rate cut by June, although now it has been thrust into the realm of speculative guessing. That concludes our news for today. We hope it's been beneficial to your trading, and we appreciate your viewing. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find information about our Traders Training Center and also a link to our Yahoo forum, which is also called Succeed in Forex. We hope you'll visit us there soon. We hope you have a great day of trading. So until our next broadcast,